late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, arena so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, welcome back. So today we're going to talk about the macro, take a look at some of the major indices. So we did get a little bit of bullish news and some good reactions from the market in the past couple days. We did see that Trump essentially saying that there is flexibility in these tariffs. Obviously, he's using them as a negotiation tool. That being said, they still are causing a lot of uncertainty in the markets, and we're not really sure what's going to happen in the future because it seems like every day we get new news kind of about the tariffs. So originally he said flexibility on the tariffs, and then we saw Canada actually removing their 25% electricity tariff on the US for now as well. So just in retaliation to that ability for those flexible tariffs, obviously it's just being used as a negotiation tactic at this point. So with that being said, we also did just see that he is planning to actually implement tariffs on Venezuelan people that are importing Venezuelan oil as well are going to be included in this tariff. So it hasn't even been a day, you know, we had a little bit of relief, a little bit of de-escalation of the tariffs that were expected to come in, and then we have different tariffs announced for a different country. So again, we're going to have to just sit and wait and see what the markets do. We're going to look at the charts, look for that confirmation. But ultimately, taking a closer look at the charts to start off, get an idea of what's going on. So we're going to start here on the dollar here. So that's the US dollar index, the DXY. Just looking at some prior comparisons to other local tops or other kind of significant tops here. So we can kind of see we're basically just riding this up-sloping trend line right now. We are holding this support through here. So we did see from this peak up here, we were in a bit of a downtrend. We were able to break out of that downtrend. We're currently holding this down sloping trend line as support. I do think the dollar is likely to get another leg up, although I think it might end up kind of at a lower macro high, in which case we start to hopefully break down from there. We really need to see the dollar breaking down if we want to see risk assets really going on to perform well. We can kind of see, looking at the other prior extensions in through here, so all the way through 2014 up to 2018, we had this large extension off of the moving averages. So we see our uptrend here, 50-day moving average on top of the 200-day moving average with price supported above the 50-day. Same thing that we saw over here and same thing that we saw right here. Now we're in this sideways consolidation downwards price action phase. You can see as soon as that moving average curled over, we started getting these bearish crosses. You just go in this sideways price action. So not a lot going on. Essentially price just flip-flopping like this. So generally you're looking at a bit of a ranging market when you get into levels like this where you start to kind of get that up and downwards movement. So risk on assets kind of pumping and then dumping repeatedly over and over until we get those sustainable breakout moves or breakdown moves that allow our risk assets to perform well. So we're just watching that right now. In a similar bit, we had our pump here, and then we're just in this sideways consolidation for now, attempting to break out. So we're going to zoom into the lower time frame and look at this breakout and see what might be a potential target, but just highlighting other similarities to these peaks. We see the MACD here, basically two peaks, each with a down sloping lower high. So the same thing across all of these. And then looking at our DMI, so our directional movement index, you can also see right at the peaks of these rallies, you can basically, that's where you start to see that blue DMI positive line losing that DMI negative line. So the orange getting above the blue line, signaling more bearish momentum likely to come in the future. Same thing that we saw here, right with that peak, we see that blue line just losing that orange line and then ultimately going in our downtrend. Same thing that we saw right here, and then that's what we're going to look for right here. So we're going to watch and see kind of how the DMI forms right through here. If we start to see that orange line continuing up above the blue line and the blue line continuing down, that signals to me likely more bearish momentum and we could be due for that breakdown. But we're going to take a look at the low time frame here. So looking at the daily and the weekly charts, you know, the dollar looks like it could be due for a bit of a bounce. We see pretty much coming from very oversold territory here, very oversold territory on the MACD with a bullish cross, and then that that bearish momentum losing steam, and we see that blue line curling up towards it, signaling that kind of bullish momentum. So we saw here we're stuck in our downtrend, breaking out. We were in uptrend structure here, and then you can see where we reversed it. We put in a lower low, a lower high, another lower low, and this is another lower high. This is that confirmation. The rejection here under the 50-day moving average is that confirmation of a likely continued downtrend. So that's what we want to pay attention to. If we're stuck under the 200-day here, that blue line, and we're stuck under the 50-day here, and we're in that downtrend price action, lower highs, lower lows on the high time frame, it doesn't look the best for the macro. That being said, we can get little relief bounces. So kind of what I'm expecting here is at least a bit of a bounce up towards this resistance zone up here. So we're going to come up, try and attack the 50-day moving average, but we will have resistance at the 618 up to the 786. So the move could extend up to here, but if we reject here, we kind of end up with that lower macro high, and then we might come back down here. If that plays out, that's a lower low, and we're likely to kind of just do something like this. That's what ideally we want to see for our investments to do well, to really show us that kind of risk on is kind of the appetite of the market. So we want to pay attention to the dollar as well as our indices. So we'll flip. So I want to start off on the SPY here, taking a look at kind of the price action dating back to 2009. So after the great financial crisis, basically markets have just been trending up and to the right, with the exception of a few different kind of retracements, some recessions, but ultimately that price just continuing to increase year over year. Basically what I wanted to see was every single time that we had a bearish cross of that 50-day and 200-day moving average, as well as what the kind of downside drawdown was. So we've seen basically 1, 2, 3, 4, 5, 6 different bearish crosses of the 50-day and the 200-day. That's what I'm looking at right now. I think we could be headed for that bearish cross, and we need to kind of look back at history, see what happened the last times to figure out what might happen this time here. So a lot of the times history does tend to rhyme. It doesn't always repeat, so expecting it to repeat the exact same might be a little kind of just a little unrealistic, but we can kind of see anywhere from a 10% drop here in terms of anywhere from that 10% drop, not actually there where we lost that 200-day. We didn't get a bearish cross, but we did lose the 200-day. So that's kind of what I want to show you as well. We do have the potential for the 50-day to curl back upwards and then price to get above it, and we can continue higher. That being said, we really need to pay attention. The other alternative is that back test and rejection. So you can see right here we had an initial 14% drop in the SPY. We had a little bounce here that's actually a decent little bounce up to kind of just above that 50-day and 200-day. But not sustainable. You can see it broke down back below those moving averages. We then came to lower lows. We retested, and then we got rejected again, and then ultimately coming back to these lows where we were able to find them. And then that ended up being a total bleed of 27% to the downside from this peak to this low, despite all these little rallies in here. So a lot of people are kind of getting excited over this little rally right here, and it is a nice little bounce from heavy support. We can kind of take a look. You're probably looking at, that's only a 4.5% move. You can see in these moves over here, we basically, once we found that low, we moved 10% back up to that 50-day moving average, and then same thing right here, we moved 12, almost 13% just above those moving averages before rejecting and continuing down. So this move right now, it doesn't mean anything to me. I don't think the market is well, I could be bottomed here, but there's no confirmation on the charts, so I'm not assuming that a bottom's here. This is just one little candle. Here is also kind of indecisive. We've got a little bit of a bullish spinning top, but it's more kind of a bit neutral looking. So we will have to follow this. We want to see that 50-day moving average curling back up. It looks good on the weekly, but when we flip to the lower time frame, we can see it's not curling as much as we kind of want it to, but it is flattening out a little bit. So we're going to continue watching this, but we see a lot of resistance up in through here. So we've got our Fibonacci resistance from this this high to this low, and our golden zone marked. We've got the VRVP point of control also as resistance up here. So a lot of resistance for the SPY coming back up into this zone right through there. Why that's important is because we don't want it to reject at these moving averages. That's going to symbol something more like this, where we have more of a sustained downwards move because we've come up, price has kind of lost these key levels, and then we just get rejected on the back test of these supports. So we can kind of take a look again back at the high time frame and then see the most recent examples, how we kind of look compared to those. So just spreading this out a little bit and then expanding on that, we pretty much see that basically right through here, this was the bearish scenario, that continued breakdown, and then here was actually a bullish case scenario where that 50-day curled back up. So you can see, although we lost the 200-day moving average briefly, we are actually able to hold it as support, get back above both these moving averages, didn't get that bearish cross, and we were able to continue that move to the upside. And then from there, you can see that the market moved up another 50%. So really good move there. We need to watch. That is a potential that that happens. We see a kind of similar DMI setup here. You know, it's looking more similar to this one over here, in my opinion. Same thing. We're just looking at the MACD. Also, this is more extended on the MACD in this rally as well as this rally, so you can kind of see right in the middle here, we didn't get to those upper extended levels on the MACD, kind of topping out a little bit lower. This is really where we had that euphoria, that overbought nature of the market. So ultimately, looking here, we can see that this kind of did continue going down. It didn't bottom until way over here, and then we didn't get the low until we kind of had that confirmed double bottom, higher low on the MACD. So if we saw something similar to that playing out, you know, we could just see price continue to bleed to these lower levels, and then we might see our moving averages just coming down and bottoming down here somewhere, and then getting that higher low before we're able to continue up. So basically, just looking at these indicators, to me, it's resembling this peak a little bit more than this one in here, but we can kind of take a look just every single time that the SPY has broken the 200-day moving average, as I said, has experienced a pretty decent drawdown, each varying to their own degree of magnitude. So we see, you know, 17, 18% here, 21% here, 15% here, 21%, 25%, 27%, 14%. We also had a 55% correction in there as well. So you kind of see every single time we have that bearish cross of these two moving averages, there's at least some downside. When you take the average of all the different instances where it's played out, you're looking at about 20 to 25% average downside when calculating kind of that mean number. So if we're looking at a 20% downside from the current price action, that would put us down here kind of around these order blocks. You know, that's not going to be good for price action, but it also kind of, I don't know if 20% is going to be that, if we're going to quite get as large of a 20% correction. So what I want to show you, what I've looked at previously, if we're thinking that this top is similar to this top over here, we might expect some similar kind of retracement. So we'll pull our Fibonacci from the low to the high. We can see we came back to that 0.5 level. So if we take the same target from this low to this high, sorry, not from this low to this high, because basically these have all played out. So all these kind of have already had a Fibonacci retracement play out. So we're playing off this current breakout, looking at that 0.5 Fibonacci target here for support, and that's going to be, I think, about 17% down. Yeah, 17% down from the all-time high. So looking for a potential accumulation of the SPY at these targets down here. That's also where the weekly buy order blocks line up. So confluence of support and also kind of a little bit of history rhyming there. Moving on to the NASDAQ. Also, kind of another one that I want to look at. So we did see, looking here on the monthly, I just wanted to kind of take a good look at the NASDAQ over a long period of time. We see that we did get that bearish divergence, so the price making a higher high, RSI making a lower high. We've got that double extension on the MACD with that bearish cross. We've got the bearish momentum building here on the DMI, similar to what we saw over here. So again, this is resembling similar to this in my opinion. It doesn't look as much like some of the smaller retracements back here. And the reason I don't think it looks as much like that is just because the MACD is quite a bit less extended. RSI though is always at these kind of historical levels. We did get to that overextended, so I'm not surprised to see that weakness. The same thoughts with the SPY. We need to get back above these moving averages and hold them as support. If we get that bearish cross and confirmed rejection underneath, we're just looking at a more continued sustained downtrend. So not too interested in buying into a downtrend just yet. There's going to be time. The market's not just going to rip to all-time highs and continue going up without giving you any opportunities to buy in. Price always comes back and retests support or resistance in some sense and allows us that opportunity to enter the market when the trend is confirmed, and then we ride that trend. We don't end up buying resistance, we don't buy falling knives, and we don't get caught on the wrong side of the market. So we're going to flip over to Bitcoin quickly here. I want to take a look at this and then also kind of just, again, it's more of a cycle to cycle comparison. So a lot of people, kind of pointing out that the RSI has gotten down to these historical low levels here. That being said, 45 RSI is not really that low in terms of an oversold nature of an asset. They're just kind of pointing out that in this cycle, it has bounced a couple times from this level. That being said, it doesn't have to bounce from that level every time. We can kind of see right in through here, we had our first peak in 2021, and then we came down, we bounced from this level here. We managed to go up to a second peak where we printed that lower high. This is also that bearish divergence on the price action, so higher high price action, lower high RSI. So then we see basically coming up, ultimately just rejecting here, coming back down. You see we lost this support, so broke below it, went up, back tested, not able to kind of durably hold this as support, and then ultimately just trending down to these lower targets into this bear market. So if we look at the current price action, we can kind of see some similarities. We have our initial upswing, we've got our first retracement, we've got our sweep below the 50-day and 200-day, we've got a second higher high right here, and then we've got our bullish cross of those moving averages, and then we've got our bearish cross of our moving averages, followed by that sweep and the rejection. So if I zoom in, I'll just show you a little bit closer. I'll get rid of this, but basically what we saw, getting nice and close in there, we can see coming up, 50-day curling back over. That's a signal that we're losing momentum. We come down, sweep below these moving averages, and this is that retest into resistance. So these moving averages now acting as resistance, ultimately getting rejected, stuck underneath, and that's that downtrend bear market price action. So we need to pay attention. We're going to look at kind of the same similar setup that we might see. You can kind of see up, first high, first low, second high, second low, rejection on the lower high, stuck under the moving averages. Right here, we kind of see a similar setup, although it hasn't finished playing out, so we can't assume. We aren't getting like a ton of volume really coming in, so nice, a little bit more buying volume lately. We do want to see more buyers continue to step in, but ultimately we have our first leg, first retracement, sweep under the 50-day, 200-day, bullish cross, second leg, second high, and then secondary sweep underneath the 200-day, looking at that potential relief rally to a lower macro high, and look for that rejection there. Either we're going to reject and continue lower, or we're going to break out, come back, and hold it as support. If we break out, come back, hold it as support, and our momentum indicators look good, and the SPY looks good, I think that we could look at starting to take some positions for that eventual continued uptrend. Otherwise, if we get that rejection, we're just waiting because we don't have confirmation of the trend, and we wait to look for that bottom structure to really form. But just also flipping back to kind of the 2017 cycle. So a lot of people, everyone just trying to figure out what's going on in the cycles. I think this cycle is kind of resembling this cycle quite a bit in terms of technicals, traditional technicals like trading view indicators. Over here we can see we only had one major peak, and then we kind of came down. We ultimately just got a little bounce, dead cat bounce, lower high, and then rejecting below our moving averages. Here you can kind of see the structure is quite a bit more similar. That's why I kind of consider this to be more likely. You can also see RSI setup is quite similar compared to this peak in through here. Not so much through here. Same with the MACD. So double setup here, same thing here, double extension, and DMI also quite similar to what we're seeing over here. So that's why I kind of think we're more similar to this cycle right now in terms of just the chart itself from a trading view perspective. This has nothing to do with cycle indicators, but it is something, these are worrying signs to me, because this would signal we could have our secondary peak, and then we might just be in a relief rally, our dead cat bounce to a lower macro high before continuing to the downside. So we need to pay attention to that. Just looking now, we are above the 200-day, which is good. I'm going to take a look at the very low time frame for you here and see if we can figure out what's going on. We're still stuck in this bearish wedge. So I pointed out this on a different video there, sorry. Pretty much what we see, stuck in this bearish wedge. We do have a lot of resistance here. There's that 50-day moving average, this big sell order block in through here, and we've got this upsloping trend line. That being said, you know, if price can break out and get above that 50-day, hold the 50-day, then we can really start to talk about a potential continuation as opposed to a trend reversal. So if we see that confirmed continuation, we'll likely try to get in as good, or kind of the best setups we can find. But we're not rushing into anything. Price often is going to come back and retest lower levels. There is a CME gap, so a Bitcoin futures gap around 85,000 and at about 82,000. So whether those get filled now or later is kind of going to be dependent. I might look to take a bit of a swing position around 85,000, which would also kind of be somewhere kind of closer to the bottom of this wedge. So looking for that potential as a swing position. Otherwise, we're still waiting for that confirmation. You know, there's an argument to be made for either side. I think I'm kind of 50% in the market, 50% out of the market. So I don't really have a certain bias. I'm just waiting for that confirmation on the charts. So when we say that, you know, it's all about these moving averages. It's all about the price action. I've talked about all this stuff in my educational videos. So if you haven't checked those out, definitely go check those out and touch up on some of these skills and concepts that I do talk about. But for the most part, looking at Bitcoin here, we're still sitting on our hands, waiting to see what happens. Look at all this resistance up through here. It's going to take a lot of work for Bitcoin to really durably break out and continue upwards. So it's going to give us those opportunities to add positions, to open new positions. You know, we're not in a rush because we want to preserve our capital first and grow it second, especially during times like this. You know, we're coming into resistance. We're not quite sure with kind of the certainty in the markets. So we're not taking any excessive risk without that confirmation. So remember, guys, be patient, manage your emotion, and then we'll make our buys, we'll execute when we get that confirmation, when it makes technical sense to do so, and then we'll ride this market up together. So if you learned something new, please share, like, subscribe. It all means the world to me, and I'll see you guys in the next one.